Hello and welcome to today's SGI webinar, Who is Buying Graphics Businesses Today? My name is Dan Marks. I'm SGI's Director of Content Development, and I'll be the moderator for today's session. On behalf of SGIA, I'd like to welcome you and let you know our webinar system allows you to ask questions through your computer. So if you have questions at any time, even now, feel free to submit them and we'll get to them at the end of the formal presentation. Before we get started, I'd like to introduce today's speaker, Mitch Evans from Graphic Arts Advisor. Mitch is going to share with us some of his knowledge and some of the information he has on what's going on in industry consolidation, who's buying businesses, and really what it takes to sell a business today. So Mitch, welcome.
Dan, thank you. Thank you very much. As Dan mentioned, Mitch Evans, I'm a director and partner at Graphic Arts Advisors. I want to thank Dan and his association for giving me this opportunity to talk to their members. Just as a side note, I've attended the last couple of SGIA conferences or trade shows. Been very impressed, and I certainly will be in Dallas in October for the Printing United show. Our topic today is who's buying our graphic businesses. Here's a little bit of my background. I've been in the printing industry, hard to believe, over 40 years. I started in 1978. I bought a very small company with my brother in New Jersey, spent 23 years as an owner of that business, sold my business in 2001. My goal was never to be perpetual print business owner. I love the industry. I like the action. But certainly it wasn't to be in it forever. It was really to create some opportunity for myself and some wealth, for my long term. I've done various things since that. I won't go through the list here. You can see it here. I've actually been involved in over 200 transactions in our industry, and personally I've actually bought and sold 8 businesses. So I consider myself a little bit of an entrepreneur, and also when I get involved with our clients, I feel like I can talk their language because I've really walked in their footsteps over the years. What I want to do is go through some of the statistics in our industry, kind of just to set the plate for who's buying our businesses today. First, a lot of the information I'm going to present today is from the Target Report. For those of you who do not get the Target Report, my partner Mark Hahn has been publishing these reports on a monthly basis since 2011. Basically, they have a monthly listing of all the M&A transactions that happen in our industry, also include plant closings and any bankruptcies that happen. Mark also provides excellent commentary on that information. And it's really widely distributed to printing executives, financial executives who specialize in the industry, and also to vendors. And again, if you're not receiving the Target Report, just let me know and I'll make sure we get you on that list. Looking at one of the charts that just got published in the last month of the Target Report is really a list of the transactions that have happened in the last 12 months and comparing that to the trailing 12 months of 2018. As you can see, it goes up and down. There's no steady pattern to things that happen in our business. And again, these are when these transactions are reported, which may be a little different than when they actually closed. Just so you're aware of that. If you analyze this data, you'll see that there's a few less transactions that happened this year, about 8% less that happened in the last 12 months versus the previous 12 months. And I will comment on the reason, at least the reasons I think that that's the case later on. Breaking down the transactions that have happened in the industry by segment, you can look along the bottom here, and we've divided it up into almost 20, 25 segments in the industry. And you can see how the transactions compared to last year versus the previous year. Obviously, there's some areas that are bigger than others, commercial, printing, packaging, publishing, being the leaders in there. And you can see the pattern. Some are up a little bit, some are down a little bit, and really, from a statistical standpoint, there's nothing significantly up or down that are in there. But I will talk a little bit later on some of the reasons for there. Why are we seeing all these transactions in the industry? This quote was taken from an article that I read 2 or 3 years ago, and I put it in here because it's really still relevant today. The pace of consolidation, we have no idea where it's going, but we believe that it's going to be more accelerated than a gradual increase. Looking at the statistics, and I'm going to start off with what I call the sad statistics. And just looking at the number of shops that existed when I sold my shop in 2001, there were 42,000 shops, and my old shop is still in existence, so it's not one of the fatalities in here. But in 2015, that number dropped to a little over 25,000, and the forecast in 2022 is for 21,000 plus shops, which is almost half of what they were 20 years before that. You know, as a consequence, we have less employees in the industry. It used to be a lot of the print owners in the industry were ex-employees of companies. We don't see that happening as much as it was before. In fact, a lot of the people that I've met over the years that own printing companies, quite honestly, used to work for their old printing company or work for one of their competitors and end up getting into the industry by starting or buying a company. Shipments have dwindled by 50% since 1995, and that was the year that the internet really started catching on. And I don't think it's really any coincidence that that's the case. Obviously, we know that the internet has replaced the need for a lot of the printing that we have today. Capacity utilization has declined. Back in the 70s, according to industry statistics, it was over 90%. In other words, 90% of the capacity was being filled. And today, statistics tell us it's less than 70%. And quite honestly, I believe it's even less than that. A couple of the reasons, you know, equipment is faster today, a lot less setup times that you need to work on jobs. But still, it's a big jump in capacity utilization. And that feeds the reason why a lot of printers are interested in doing acquisitions. Looking at pricing has been flat since the recession. And if you account for inflation, it actually means that our prices today on a inflation base are really less than they were when the recession ended. So that's kind of amazing. What really is absolutely amazing, and as far as I was concerned, is the profits have really kind of stayed steady since the recession. And, you know, why is that? You know, why would prices basically relatively have gone down, but yet, you know, our industry has been able to keep up their profitability? Well, one of the reasons are that I think print owners, when the recession happened, they really looked to cut expenses. And once the recession was over, they realized a lot of the expenses they had, they didn't have to replace. Payrolls, I think, were much tighter. Not a lot of raises were given out during that period of time, or even subsequent to that time. There has been a small increase in profits throughout the industry. And I think most importantly, there's been a really decrease in capital expenditures. People are sticking with the equipment they have. They're not replacing it as often as they used to. And obviously, that's also something that fuels acquisitions, as, you know, when people are looking to spend more money to replace some of their equipment, they wonder, is it worth the risk to stay on, or should they just at that point sell their business? You know, really the combined result is companies out there, particularly the leaders, have better balance sheets, which again, I think feeds into the fact that they are in a position that they can buy other companies. In a recent survey by What They Think in 2018, last year, about 25% of the industry sees acquisition as an opportunity. Quite honestly, I believe that there are even more that are interested in that. It's just that quite a few of them are not in a position financially to afford an acquisition. Other positive statistics is sellers today are getting higher multiples than at any time since the recession. Multiples are the highest for packaging and label companies, and on the low end for traditional commercial printers, particularly ones that are primarily offset or web, particularly co-web, really have the lowest valuation. And that's really a sign of what's going on in the industry. Right in the middle there is probably wide format signage type companies that are very attractive now, still growing, and they're kind of in between when it looks at multiples of that they're selling for at this time. Why are companies selling? The primary reason is that little graphic I have down here. Is there are a lot of people that are like myself that are baby boomers that got into this business either with their family or part of their family, and they're aging out. Quite frankly, they're getting to the point that their kids don't want to get in their business, and quite frankly, a lot of the printers don't want their kids to get in the business because it's a tough business, particularly in the commercial end of the business. A large percentage of these companies were formed or founded back in the 70s, 80s, and 90s, or at least 20 years ago. A real high percentage are under $10 million annual revenue, so they're considered relatively small businesses. Sales and profits, generally speaking, are not increasing. And again, as I said, the equipment hasn't been updated. And technology is rapidly changing. We're seeing an influx of inkjet printing, which I believe will at some point really take the place of quite a bit of the toner-based and offset-based technology that we have today. Also, the growth in the past few years has been, slow. It's 3%, which is better than it had been during the recession. But you adjust for inflation, it's really only about 1%. But what is interesting is the companies that are growing are the very small companies on one end, and I believe the reason their growth is particularly in profits is the fact that they really cut down to the bare bone in expenses. And over the 50 employee companies, the larger companies, typically these companies are over $8-10 million in revenue, and they offer a lot to their customers, and they're really working hard. They are replacing their equipment. They are showing growth. What's happening is the mid-sized companies are the ones that are losing ground, and they're the ones that are really ripe for acquisitions. These are the companies that seem to be transitioning the most. Another reason is real estate values are very healthy throughout the United States. And what's interesting about that is we've had several clients recently who came to us to sell their businesses, and they're also selling their real estate either with or without the business. And the main reason is the real estate, in some cases, is worth more than their business. And they just feel this is an opportune time to sell the real estate. Obviously, the recession, a lot was caused by real estate values, both on the commercial end and residential end. And that's really kind of reversed. Values are in most areas of the country are above the pre-recession days. And people, quite honestly, a lot of these print owners have either paid off their buildings or have a lot of equity in their buildings, and they're looking at that as part of their retirement. What are buyers looking for today? Primarily, they're looking for tuck-ins. Some buyers are looking for other locations, but primarily, I'd say 90% of the buyers out there really want to fill or replace lost capacity during an acquisition. Some want to do a strategic acquisition, add new profit centers. It could be mailing services, wide format, promotional products. Some do want to expand the market, which means they might be buying an additional location or buying a company that's selling into a different geographical area than they are. Another reason, and we've run into this several times recently, is getting talent. I actually have a client in New Jersey that I've done 3 buy-side outreach programs to. We were very successful and found buyers. And one of his main reasons was he's having trouble finding people to work in his company. So he was obviously wanted the sales that go along with the talent. But I'd say his number one reason was the talent, followed by the sales that would come with that. There are a few buyers out there that need to move or add space, and so we see occasionally what we call a reverse tuck-in acquisition, where the buyer actually buys a company and moves their business in with the other company. It's kind of a neat way to go into it. There are a lot of printers out there that have too much space and would love to have another company go into their company. There's a few transactions we've had recently that one of the primary reasons that they did the acquisition was that they were also able to buy the real estate. By buying the real estate, this gives them a stronger financial position with a bank if they're borrowing some of the money to do the business acquisition. As banks generally don't want to loan that much money on a business without some collateral, and obviously if there's real estate involved, there's adequate collateral that banks like to hold on to. What are sellers looking for? Well, most sellers are looking to retire, and they would love to sell their business in place. They also, if they own their real estate, may want the business to rent from them or sell the real estate with the business. There are some sellers out there that want to stop the bleeding. It's amazing. I thought most of the distressed companies kind of got washed out after the recession. but that's not true at all. There's still several companies that are just hanging on there. And in fact, we just recently sold a mailing company out in the Midwest that literally was losing $100,000 per month. Luckily, the owner could afford the loss, but needed to stop the bleeding, and we were given a very short timeline to sell the company, which we were able to accomplish because they were literally ready to close their doors. Some sellers that are younger, they might want to work with a larger organization. We got actually a company that we're marketing right now. That's the position that they have. They've kind of taken the company to the place as far as they think they can take it. They really aren't in a position, well, they're probably in a position financially to do it, but they don't really want to take the financial risk to try to grow the company from where they are to maybe a $20 or $30 million company. And also, some owners want to take some chips off the table and look to do something else. That's kind of what I did when I sold my company. What do buyers want? Buyers want deals that minimize their risk. They look for seller financing. They certainly look for earnouts. An earnout, if you're not familiar with it, is a term we use where the deal is the amount of money on the purchase price is contingent upon retained business and paid on a percentage of that business or a percentage of margin on that business. And that's considered an earnout, and that's paid over a 2, 3, 4, 5-year period. And it really helps a buyer minimize their risk, so they're only paying for what business stays on after the sale. Buyers want obviously quality clients with good margins. Also, buyers feel that if they buy another printer and bring it in, they have some production efficiencies that they can bring with it and be able to produce some of the work at a lower cost than the seller was able to do that. They can reduce some of their costs, cover their overhead better. They pick up some key employees, and there might be some equipment in the deal that they want. And they certainly want the seller to pay off all their liabilities if possible. What do sellers want? On the other side of the fence, the sellers want an all-cash deal. They want a good home for their clients. They want their employees to have a job. Ideally, they'd love to sell all their equipment inventory to the buyer. Again, there's a little bit of a conflict there, so we do advise them that a lot of buyers don't want the equipment, so be prepared to auction some of it off. Buyer, if they have equipment leases, would love the buyer to assume those leases. And there are some that want to continue to work for the buyer, whether it's for, transition period, but in many cases it's for a couple of years. Quite honestly, though, we do see when that happens that quite a few of them, after about a year, decide to leave. Either the buyer wants them to leave, or the seller just isn't used to working for somebody else and want to move on. Why a deal slowed a little bit in this last year? And again, I think it's really not statistically valid. 8% is not a big number, but here's some of the reasons that I think that they've slowed down a little bit. The economy is doing well, so most business owners are optimistic about at least the near-term future. There is a lot less sellers than buyers out there. We also find that some people that want to sell their company are really overvaluing their business. Even though it's a really good time to sell at this point, we also feel you're not going to get a real high premium for your business unless you're really, a seller is really still growing their business and has solid profits. Buyers, quite honestly, are looking for deals. They're looking for lower multiples than the seller may want, so there is a disconnect between the two. A lot of sellers are not willing to sell as tuck-ins. It could be because they still are tied up in a lease on the property they have, or they own the real estate and don't know what to do with it if they sell their business and don't sell the real estate along with the business. We also see that some sellers kind of look at some of the deals and say, well, one of my alternatives is what we call the milk it strategy. The milk it strategy, quite simply, is where they hang on. They know sales are going to decrease, profits may decrease, and they're just going to hang on for the next 3, 4, 5 years or whatever time it takes, and realize that the business will slowly go out of business, and then they'll just have to liquidate at that point. But they think, well, maybe I can make as much money or more money by doing that than trying to sell my company at this point. Quite honestly, I believe that's a silly way to look at things, because the few people that I've seen do that, after a year or two, realize the business is sinking even further than they thought it would be. They basically have checked out mentally, which even makes that even a worse situation. So I think there may be a few cases that may be a sound strategy for some sellers, but generally speaking, I don't think it's a good way to go. Buyers continue to look for good deals, just like in anything else that they do. There are less distressed companies out there that need to sell. And quite honestly, a lot of companies that were looking to possibly acquire, let's say, a sign company or a wide format company or a mailing company have decided just to diversify internally and go that route rather than trying to do an acquisition. Why will M&A grow in 2020? We see the economy is showing some sign of weaknesses, and we also think that buyers will stay in the market and decide to pay more for profitable businesses. It's a tough decision. Do I buy the business now or wait? And maybe the seller's going to wait another year and their business might go down or change, and I can go back and buy it for less. I don't think that's going to happen. So I think buyers will step up to the plate a little bit more. Interest rates look like they're going to remain low. Banks, particularly backed by SBA loans, there is financing available to buy these companies. The demographics continue to work in our favor. Owners will continue to age. And, we also see that buyers are willing to take on additional facilities, especially if it expands their marketing area. During the recession, I don't think anybody wanted an additional facility, maybe in the packaging end a little bit, but today we are seeing people out there that are looking to expand their horizons and are willing to take on the overhead of another location. The other thing that I think is going to happen is, sellers that not replacing their equipment will have paid off their equipment, so they're more in a position to sell their company. A lot of sellers realize when they have leases, 2 or 3, 4 years left on a lease, that it's not the perfect time to sell the company, so they will hang on. And I think next year there are going to be more of them that are in a better position to do that. Also, organic growth, particularly in the commercial printing area, continues to be tough. Seems there's a lot more competition. There's internet competition. So they're going to look to, if they want to keep their sales up, they're going to continue to look for acquisitions. At this point, I kind of want to look at specific industry segments. And I'm going to start off with commercial printing. I'm not going to go through all the segments that were on that initial chart. There was, over 20 segments that were there. And let's look at commercial printing to start. Now, who are the buyers of commercial printing companies today? By far, the number one buyer of commercial printing companies are other commercial printing companies, larger commercial print companies in particular. We've had a few cases where a smaller company bought a larger one, but that's pretty rare. We also feel that there's kind of a ratio out there that is at least 3 times. A company that's at least 3 times your size is more of a typical buyer than somebody that's less than that. On the other end, we don't see a lot of companies that are $40 million buying a $1 or $2 million company. Although I did sell a company a couple years ago that was $2 million, and a company that was over $30 million did buy it for some particular reasons. Digital printers, I've seen a couple of digital printers that in one case has never had offset in their shop looking to buy an offset printer. They've realized for them to grow from, they're about a $5 million a year printer. If they want to go to be a $10 or $20 million printer over the next few years, they need to diversify in how they produce their work. They sub out a lot of work, and they really think that by buying a commercial printer that they have an opportunity to expand their company internally. Small commercial printers are buying a lot of other small commercial printers. In this case, most of them are buying their competitors, tucking them in most cases. I believe that a lot of these sales are not recorded. They're not publicized. And again, on the Target Report, we only report companies that have publicly announced that the transition or the acquisition, or we're aware of it because we were either involved with on one end or the other. So I think there's a lot of small commercial printers out there that are buying some small companies, particularly just to buy a book of business of $200,000, $300,000, $400,000, $500,000 that are out there that really kind of fall under the radar. There are some consolidators in this area. A few of the big ones in the past are no longer, but right now there are a couple national consolidators. Matera is one of them. Another one is CJK, which is primarily buying book publishing companies, book printing companies, not publishing companies. And there are a few others. There's some regional consolidators. We know of a couple that are in the East Coast that are buying up companies that are in basically related fields, looking to consolidate that industry, potentially funnel some of the work into some of their other locations, look for efficiencies in that. I don't see a lot of growth in this area with these type of consolidators in the future for traditional commercial printers. We also see some ESOPs. I've run into several recently, basically commercial printers or marketing service provider type printers that have converted to an ESOP. I won't go into an explanation totally with an ESOP, but it's really an employee stock ownership program that allows the owners of these companies to sell their company to basically to a trust that's owned by the employees, where they can basically cash out. It's backed up by bag financing. And it's really kind of a leveraged buyout by the employees. The owners are allowed to stay there for a period of time. Usually they stay on for 3 to 5 years to continue to run the company in some capacity. And then again, they get to sell some of the remaining stock at the end. So it's a good tax benefit for owners. I know a lot of companies look at this, but quite honestly, it's geared for companies that are, I'd say, at least $10 million in sales. And probably $1 million or more in earnings, because there are some high costs that are associated with it. You have to have the company reevaluated every year. There's a lot of requirements that have to be met, and it's relatively costly to do that for a small company. There are some private equity companies that look at commercial printers as acquisition targets. In some cases, they already own commercial printing companies and looking for what we call bolt-on acquisitions to add to their portfolio. I think most of these people are looking for companies, commercial printing companies that have a certain niche or a certain product, that their product niche or a market concentration niche where there's higher growth than there is just being a traditional commercial printer. And quite honestly, in commercial printing, the ones that I consider to be the leaders in the industry are not what I consider general commercial printers that just do projects for anybody that comes in their door. They're ones that really concentrate either on a specific industry, or they have certain products that they know how to sell, market, and produce very efficiently. Why are these transactions happening? This is kind of the rationale. And again, I'll thank Mark Hahn and the Charter Report for putting this together for us. There were 39 transactions in this space last year that were reported. If you see, 28 of them were tuck-ins. This is absolutely no surprise and ties in with my previous comments on tuck-ins. 11, which is the difference between the 39 and the 28, were additional facilities. 7 companies did the acquisition because they were new services. 7 did it because it expanded their geography. 4 were actually PE-backed acquisitions. And none really got out to a new platform, so it was kind of interesting. But again, in this area, a high majority of the acquisitions are going to be tuck-ins. Looking at packaging and labels, it's almost just the opposite of commercial printing. We see most of these acquisitions not being tuck-ins. This is a real growth area. And why is packaging and labels growing versus commercial printing and other areas of the industry? Well, it's pretty simple. There are many, many companies out there that are producing products that needed to be packaged. And what's most important is there are a lot of smaller companies that are producing these products to the marketplace. The internet, I think, has introduced another way to sell these products other than through traditional stores. There also, even within a product line, there are different versions of that product, different flavors, different sizes. They call them different SKUs that are out there. So rather than selling one product now, that one product goes not in one box anymore and print 1 million of them a year, but now they print like 20 versions of those, and they're printing whatever the math is between 20, the million total that they'll sell in 20 different SKUs and sizes. It produces basically shorter run packaging. It's not packaging that normally could get produced, let's say, in India or China. It's stuff that has to stay here. So there's a lot more short run packaging opportunities out there. And also packaging is very reminiscent of what I would consider the old forms business when I got started in the business in the 70s and 80s and 90s, where once you had a client that was ordering forms from you, you could count on every 3 months, 6 months, you get a reorder for the same thing. Maybe some small changes to it, but you can almost count on your future business. Packaging is exactly the same thing. People order what they need for, a 30-day, 60-day, 90-day, 6-month supply, whether it's packaged boxes, labels, corrugated boxes. It's a really, really neat business today. And again, the run lengths are getting shorter. There's other ways to produce this other than flexographic or offset. Inkjet is becoming a player in this industry. So it's to me, it's probably the strongest area of our industry right now. And as a result, the multiples on these companies are higher. There's a lot more interest from private equity in these types of companies. There are some consolidators that are in this industry. And I think that's going to continue. I think you're going to see a lot more industry type of consolidators out there. A lot of these companies, label companies and packaging companies, are family owned. And they might be doing $10, $15 million a year. And I think there's going to be some consolidators out there who are going to try to put these together and maybe even do a roll up at some point with those types of company. Private equity loves this business primarily because of the recurring revenue streams. If you follow private equity acquisitions today and even some of the IPOs that go out there with companies out there that are subscription based, like a Netflix, that's what the market loves, is if they can find companies that have recurring revenue models that will drive the values up. It takes the risk out of future sales. And again, this is a real growing industry. I know I've had a couple clients that one was in Colorado, another was out in California that got involved in doing packaging for the marijuana industry. Those are two of the early adopters of legalizing marijuana. And there's all kinds of variations and stuff and boxes and packaging that that industry is using. And it's all basically a brand new industry. And it's just exploding at this point in those states and probably all across the country right now. The other thing that's very interesting about packaging and labels is the fact that there's a global component to the packaging industry. There are, European consolidators, Asian consolidators out there. And the other thing is a lot of today's products are manufactured all over the world. And therefore, a lot of the packaging, instead of being imported into those countries, is being done right near where the products are manufactured. And in some cases, maybe it's where they're shipped and then they get packaged there because it's just easier to do. So this is very, very interesting. The good thing about packaging is that not that everybody doesn't want it sooner, but it's not stuff that has to be produced and delivered tomorrow. There's usually a time lag on it. So geography is a little less important to some people than it is in commercial printing. Looking at why companies are buying packaging and label companies, like I said here, there was only out of 33 transactions that were reported last year, Only 2 were tuck-ins, and the others were additional facilities. A few were for new platforms. These are, say, companies that were producing boxes are now going into flexible packaging, or vice versa. 18 of these were really a new geography for these companies. So out of the 31 new plants, I guess 13 were actually in existing, geographies for the acquirer. And more than half of these were backed by PE. So very interesting, a little different spin on who's buying these companies. Looking at mailing services. This is an interesting thing because I think mailing of all the industries has really seen a lot of changes. Obviously what's going on with the post office, decreasing mail, pieces being thrown into the mail at this time. It seems to be decreasing every year. The only thing that really seems to be going up is packaging, or the small packages. So mailing services.
Okay. We'll seem to have lost Mitch briefly here. Let's give him a moment, make sure we see if he comes back with us. Bear with us. Hopefully we'll be on in a minute. Please bear with us. Hopefully we'll have Mitch Evans back in just a moment. Let me see what we can do to get that taken care of here. So while we're waiting for Mitch to get back on the call, I wanted to just reach out to all of you and urge you to attend Printing United in Dallas coming up October 23rd through 25th. We're looking forward to a great presentation. And if you haven't registered, go ahead and do that. Registration is robust, and the exhibit space for that show is completely sold out. So we're really looking at a fantastic event coming up. All right, I'm going to pass to Mitch here and see if we can get him back on. Hey, Mitch, are you there? Okay. Hello, everyone. Mitch, I'm still looking to get your audio. I'm not hearing you. Okay. Okay. Bear with me for a moment. Okay, I'm going to reach out to those of you who are with us. If you can hear my voice, click yes into the questions screen so we know who we're getting through to. Okay. All right. Thank you, Mark. Okay, I'm trying to work with Mitch here. If we can't resolve this in a minute or so, we will perhaps move on. He's going to try to call in on the audio to see if that can get us through through this issue here. Please bear with us. Okay. Okay, we'll give it one more minute to see if we can get Mitch on the line here. Again, thanks for your patience.
Yeah, I'm here.
Okay.
Hope we're not getting a lot of feedback.
Hey, Mitch, if you can go to the audio settings and click phone call.
I'm muted. Can you hear me?
Yeah. Hey, Mitch,
Yeah, which one of the settings is that there?
if you go to audio and click phone call.
Sorry about that.
Okay, that sounds better. Sorry about that. Let's go ahead.
No. I don't know why that happened. Because, obviously, the screen was working, so I apologize.
Yep. Let's finish up.
Yep. Okay. Just getting on with mailing services. Who are the buyers? As I think I was saying that we've sold several of these companies in the last couple of years to commercial printers. Actually, sold one to another larger company. You know, one of the interesting things about mailing companies, if they do a lot of work for other printers, it's very, very difficult to sell them to commercial printers. We do run into that occasionally. You know, these companies, there are a lot of smaller ones still out there that are there, and we just see more and more of these coming onto the market in the next couple of years. Moving on to the next wide format and signage. You know, who are buying these types of companies? You know, commercial printers who want to get into that area. We see a little bit of that. We see some digital and quick printers that are picking up. In a couple of cases, they've actually picked up some sign shops to go in with their to their company. In fact, we've actually had a couple that did some co-brands with Fast Signs out there that actually bought franchise to go along with their printing company. We also see some other sign companies buying, some wide format companies out there. Another one that I have no experience with, but they're marketing service providers who they tend to buy a lot of signage, out of shop. They provide a lot of trade booth type stuff to their clients. So I believe that is a market that anybody trying to sell their wide format and signage company, that's a market they should look at. And quite honestly, most of these companies, because they're smaller, most of these sign companies and wide format companies are under 10 employees and are resold to individuals. You don't see that happening in almost any other transaction out there. Individuals buying graphics companies today, and maybe a promotional product companies they're buying. But there's a lot of resales going on in the franchises and independent sign companies out there that, again, don't hit the market. They're not publicized very highly. But we really think that's going to happen in the next couple of years, is we're going to see these companies come onto the market more and more as that industry matures. It kind of reminds me a lot, particularly the sign companies remind me a lot of the quick printing companies that sprouted up in the 70s and 80s and 90s, and now are very mature companies, and we're going to see that. I think we're going to see that happening. Marketing services, who wants to buy these companies? Quite honestly, the best buyer of a marketing service company is a commercial printer. Commercial printers want to get into this marketplace so badly. Most of them fail at it. They just don't have the people on staff that are as creative, know how to sell marketing products, new marketing campaigns. They really know how to print all the materials, but they really don't know how to get into the companies and sell them on creating the marketing programs that are out there. So we feel that that's a good area. We're currently marketing 2 marketing service providers right now, one down in Maryland area. I think is a real good buy for a large commercial printer. Another one's in the Midwest, which again, I believe a couple of the people that have looked at it and actually made offers on are commercial printers. There's a couple of promotional product companies I've run into when marketing these companies that are looking to buy, other marketing companies, particularly ones that sell a lot of promotional products. And also another market is ad agencies. Ad agencies, again, looking to buy other ad agencies. The only downside of ad agencies is they typically don't want to buy production equipment. They don't want to buy people that have a lot of production capabilities. Typically, they're more interested in the talent that's involved in these marketing service providers. And many companies that portray themselves as marketing service providers are really commercial printers that kind of portray themselves that way, and they're really not agencies. Last but not least on my list here is finishing and bindery services. Who are those buyers? The obvious buyer are commercial printers. Typically, finishing and bindery services are doing work for other commercial printers, so typically one of their clients is the one that might buy them. I did a transaction a couple of years ago where another finishing and bindery company bought this company. In fact, it was kind of interesting because when we first started marketing this company, they wouldn't let us talk to a couple of their direct competitors, which we always feel is a mistake. Because usually the most logical buyer is one of your direct competitors in a sale of your company. And sure enough, after a few months of not being able to sell the company, we went and talked to one of the local competitors. One of them made an offer on them, and everything's working out real well. 2 of the 3 partners continue to work there. It really has worked out really nicely for both parties. I also feel that this is a very endangered part of our industry right now. I see a lot of commercial printers bringing in equipment that they normally used to outsource, things like die cutting, foil stamping, things like that. Also, technology has played a real heavy role in this. There's a lot of ways to digitally now produce things like numbering and foil stamping out there that they didn't have before. All right. What's the future going to bring? We believe that consolidation will continue for the foreseeable future. Before we started this webinar, I was talking to Dan, and he asked me this question: will this continue? And we really believe it will, at least for the next decade, as far as I'm concerned. We will see more profitable companies come on the market. I think there are people that will want to take chips off the table. So you're going to see that. There'll be less distressed companies. And quite honestly, if we do have a business slowdown or recession happen, we believe that the pace of acquisitions will go up. Normally, that's what happens in not just our industry, but most industries when that happens. So with that, I'm basically done, Dan. If you have any questions or thoughts.
Yeah, just one quick question before we wrap it up, and that's the question of, the whole Printing United event coming up is really kind of built on a foundation of this idea of industry convergence. And I know you showed one of your graphs that showed companies purchasing, looking into getting into different areas of printing. But are you hearing about that or seeing evidence that convergence is underway?
Well, there's certainly a convergence in the industry. I call it a blurring of the industry, and this has been going on for many, many years, and it's now really enveloped not only commercial printers and digital printers and mailers. It's incorporated inkjet printers, signage, wide format type printers, and I think that's going to help drive more transactions, because it's a lot easier, I think, to buy somebody that already does that and try to learn how to do it.
Oh,
there
sure.
is a fairly significant learning curve in certain industries, and I think that's the smartest way to do it. You'll get your quickest payback on doing it that way, whereas it can take you several years to develop, say, a division of your company to go into signage. So I think it's a very good, solid way, smart way to do it.
Okay. Well, thank you, Mitch, for the presentation today. And for those of you with us, thank you for being patient during a little technical hiccup we had there. If you want to reach out to Mitch for further questions, his information is right there on your screen. As I mentioned during the break, if you're please register for Printing United coming up October 23rd through 25th in Dallas. It is North America's largest printing-oriented event. It's going to be a barn burner. So with that, we look forward to seeing you online again soon. And have a great day. Bye-bye.